while I'm not super negative on liquidity for 2024, it might not be quite as smooth as it's been for the bulk of 2023. I think that, people ask me for my liquidity predictions or my Bitcoin price predictions. I have been hesitant to give 2024 ones because there's some decision points ahead, but I keep reiterating that I think the spectrum of 2024 and 2025 will be positive for liquidity and positive for things like Bitcoin price and other things like that. But there are some turbulence factors, I think, ahead in 2024 where they might not materialize, but there's a decent chance that they will. So my conviction is more about the 2-year period than the 1-year period, if that makes sense.
What's your range? You don't have to give us a price prediction. I'll tell you I'll tell you my bottom end. I'll tell you Danny's top end.
Tell me.
Well, I think it'd be very cool and incredible for Bitcoin if we get to around 150,000. Danny's like, nope, we're going to $500,000 for Bitcoin. I can't get my head around this.
Neither number would particularly surprise me, to be honest.
What a ridiculous asset.
It's how it works. You have a supply scarce asset. It's high volatility. There's a multiplier effect. So when capital comes in, the price, if like 50 billion in capital comes in, that can drive the price by several hundred billion, the market cap by several hundred billion. When I review my price predictions from the last cycle, when Bitcoin was like 9,000, I was talking about 30 to 50,000. And I was talking, when it started to kind of hit that 20, 30,000 mark, I was doing interviews saying, I think it's going to hit $1 trillion market cap, which is, a little under 50,000 a coin. And it touched all that. After that, I said, well, the bull market's playing out. I'm looking for like 100, 120,000. I wasn't trying to be too specific. I was kind of on the conservative end of what a lot of estimates were. We didn't really touch those. We only got to around 69,000. So we met my first estimate. We did not meet my second estimate last cycle. This cycle, one thing I keep stressing about my liquidity correlation that I've been pointing out is that Bitcoin is highly correlated with Bitcoin is highly correlated with liquidity in terms of direction, but there's very little way to judge a price from it, right? It's not really useful for magnitude. So it's not one of those like stock to flow models where you can say, okay, at this date, it should be this price. Like I think that a lot of that is really hard to judge. My base case expectation is for new all-time highs, hopefully over 100K, so hopefully 6 figures. But then literally that range, like you both gave your numbers, that range I think is entirely reasonable. And I actually be hesitant to guess where that ends up. I think that something like 100,000 plus would be kind of disappointing for a bull market cycle, especially after the prior bull market cycle was on the disappointing end too. So I'd kind of hope for 200,000 or more over the next 2+ years. But again, other than kind of stressing that Bitcoin does tend to be very correlated with liquidity, and that I think it'll be materially higher in 2 years. The range for what it could be is based on so many things that are hard to judge. What are the Bitcoin? Are the ETFs indeed going to be approved as everyone expects? What's the amount of capital that's going to flow into them? Are we going to get any other surprise nation state shocks or changes? What's going to happen with some of these liquidity effects we just talked about? For example, if we have a negative liquidity environment, say the middle of 2024, you could have a pretty big correction before eventually going higher. And so there's a huge array of variables that I would be very hesitant to try to guess.
A negative liquidity event in a election year is a pretty disastrous scenario for an incumbent, right?
That would be. I think that there are liquidity shocks that go unnoticed by the public because they're addressed quickly. And so an example of that was September 2019 repo spike. That's something that if you're in macro Twitter, that was like all you talked about for that month. It was a huge thing, but the average person had no idea it happened. The March 2023 banking crisis was somewhere in the middle where it made headline news, but the majority of people were not in any way affected by it. Like barely any jobs were lost over it. Most deposits were not affected in any way. It was kind of this like little brief industry shock that, a lot more affected Silicon Valley bros than like the average person. And then of course there's something like extreme, like recession or even bigger than a recession that affects everybody. And so statistics show that presidents rarely win re-election if there's a recession that year. Liquidity shocks are different because it depends on what the response to the liquidity shock is. Basically, we have to ask questions like, I talked before about the two levers that the Treasury is doing to offset the Fed. So one was draining their cash balance, and two was reverse repos. So this year, they realistically can't repeat the first one. Technically, it's possible, but it's unlikely. And reverse repos only have about $1 trillion left. So, more than half the facility's been drawn down. They could still draw it down more by issuing more and more T-bills. I expect it to I expect it to probably end 2024 materially lower than 2023. They could aggressively draw it down in half a year or less. And the question is, what happens after that? Will the Fed get more dovish and go back to kind of gradual balance sheet expansion? But there could be frictions along that path. I wouldn't necessarily expect them to be huge. I kind of think of the September 2019 repo spike or the March 23 banking crisis as probably closer to what we'd expect from any sort of liquidity shocks in 2024.